Morning traders, Paul here with GammaEdge. Today is Wednesday the 26th of October. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Taking a look at the overall summary, we have a long signal in both our shortest term timer as well as our intermediate term timer. So we are increasing our bullish exposure. That's good. The long-term signal remains off. Of course, these are paper trades only. Nothing here at GammaEdge is a recommendation to buy or sell any security. Positive gamma exposures dropped to 3,900 from 4,100. When this occurs, we get a little bit nervous about the progressive upside exposure. We like to see positive GEX actually moving up higher, not coming down lower. We are looking at this in context of as we move up in price, we expect gamma to increase above us, and the 4,100 line and above is getting smaller, which means calls are being closed or shorted, not necessarily being opened. So be aware of that. Positive GEX, or minus GEX, excuse me, has dropped to 3,500 from 3,600. This is apparently looks like folks are taking advantage of the lower prices as we advance and are looking to play downside convexity, downside gamma. So just be aware of that too. But the 3,600 line is very, very close in magnitude to the 3,500 line, so it's a race between the two. But again, we like to see the structure moving up, the goalposts moving up, and we are not necessarily seeing that at this time. That does give us a bit of pause and a little bit of storm clouds on the horizon. The Delta-Moneyness in the SPY, the Qs, and the SPX are all indicating the potential for a monetization today. We have more in the money calls by far with the potential of being closed than we do on the put side or the out of the money side. So I want to pay attention to that. I will note that Friday and next week look far more impactful than anything we're going to see today and tomorrow. So we are kind of in this coasting mode for the balance of the week into Friday. The cumulative tick model, we're on day 3. As I said, the short-term signal moved here, as you can see, day 1, day 2, day 3. When we get this crossing of the bolded CT, the bolded cumulative tick, over its shortest term moving averages, that's usually a very good indication to start looking at long exposure. End of day confirmation here was at the high of the day. That's a clear signal that you should be looking at longs on the shortest of time frames. Still in a downtrend market though, no question about that, and still below this what we call the ribbon. Is certainly not a good place for longs, but as we advanced upward, here's the end of day 2. We're almost closing in on this, so the intermediate term signal turned long yesterday as it crossed into the ribbon, basically showing that you've got a very, very good opportunity to participate to the upside, and then ending on the high of the day yesterday in the ARCX. Cumulative tick is a very strong signal. Would not be surprised at a pullback, but this is clearly indicating the potential to continue to advance upwards. So we are looking for a continuation up. If we do pull back and reverse, we would like to stay within the ribbon. We want the intermediate signal to stay turned on, excuse me, and we want to see the bolded CT not cross these white lines. If we can get that continuation pattern, we will add and keep playing to the upside as the market dictates. Taking a look at the SPX levels, the PM is here on the left, the combo is here on the right. Will note, as I said in the opening, 3,900 is the new level for plus GEX. That's down from 41, so a drop there. And the 3,500 line has taken over now from 36 and has dropped down. Expected move because we are moving into a more call-dominated environment. We are seeing the contraction in volatility, so this is normal. And expected, and you can see that a lot of the deltas are starting to turn green, which means we are more in a call-dominated environment than a put-dominated environment. Taking a look here at the PMs, These are the PM settled SPX, so this is the Monday through Friday expiries, etc., all stacked on top. You can see the JPM longs are sitting up here at 39.05. These do have a 1031 OPEX. I highlight this area because this is the call open interest dominant level for the PM settled, and you can see stacked right next to it is this 39.05, which is where the JPM reversal is occurring there. So we could see a hiding pocket here. I would not be surprised at all at short-term stalling in this area, and everyone should be aware of that. Also on the downside, the 38.30, which is approximately the area that we're trading right now. You can see the 38.30, 38.35, 38.40 area is another area of a potential stall. Again, because we have the transitions in both delta and gammas that are occurring there, and dealer exposure in these pockets reverses and is quite minimal. Below the 37.90, 37.85 zone, we see gammas starting to flip more negative. This could embolden the bears, and so we certainly would like to say stay out of this area if at all possible. So just be aware of this. Taking a look at the 0 DTE for today. We got these double bars sitting at 38.25, 38.35. We got a nice clean transition, 38.35, 38.40 here, negative gamma below. So effectively below this, we're going to flip from a positive net expiry today to a negative expiry today. That'll be interesting to see how that all plays out, but suffice to say, not expecting a lot above 3,900. Your eye can see where the contributions from the 0 DTE would be today. And also to the downside, you can see that if we do remain below 38.25, we could embolden the bears to the downside. I will note we are in a call-dominated delta on the expiry, so there is support all the way on down, so not expecting a rapid drop here at all. Taking a look at the 1 DTE, loose range below where we closed yesterday to this 3800, 3805. Again, we have a good dominance of calls all the way on down on the deltas for tomorrow. Thursdays are typically weak, so we're not expecting a lot here, and you can see that actually we're fairly balanced overall here, and the total OI that's impacting for tomorrow is not overly large. 3850 to the upside, 3800 to the downside, kind of loose in this area as far as tomorrow's expiry is concerned, so not putting a lot of weight into what we're seeing there. Taking a look at the overall combo complex, we are in a net call-dominated environment. That's what the positive here means. We can see a lot of green here. When we see a lot of green on the delta side, it's call-dominated. And then here you can see right at the 37.75, 37.80 line, we start getting into this transitional zone so we are actually quite a ways above where the transition is. When we stay above that transition, we expect to see volatility drop. We expect to see continued advancement. But note the other displays that I was showing with the PM cell. We do have these pockets where we could potentially hide. Again, the 38.30, 38.35, 38.40 area, and then up to the upside 39, 39.05, and 39.10. So pay attention to that. Call open interest, put open interest are coincident again back up here at 4,000. Not very liquid, but just be aware that they exist. So, overall positive environment, decreased volatility are the name of the game. Overall, we're indicating that potentially we're going to continue this advancement up. We are seeing a day-over-day increase in the overall moneyness, and the levels keep shifting upward, which is good for the complex. Our testing of this and our tracking of this show that when we see this advancement day over day to the upside, it typically is constructive to moving on a week-over-week basis to that direction. And right now everything's green and pointing up. Taking a look at the structures here, though, as I said earlier, we are looking at the potential for in-the-money calls to be monetized. This is the SPY here. If you look at the relative magnitudes here, you can see that the call side is just dominating everything on the relative to the put side. These are out of the monies. Over here, the in-the-money puts are very, very small relative to what we have here. So net balance, the in-the-money calls are going to win the battle today. Why this is important to you is that these folks may have a desire to monetize rather than be assigned, be exercised. And so as a result of that, any closing of these long calls will put downward pressure as the dealers have to compensate for that. So that mechanism is important. We're seeing it in the SPY, we're seeing it in the PM expiry, although it's very, very small relative to what we're seeing next week. And then we're also seeing it here in the Qs again. Friday looks to be the more dominant in the Qs relative in magnitude compared to the puts. So just be aware of all of that and what that potentially could mean as we go forward here. Final update for today, taking a look at the landscape in front of us. We got the JPM sitting out here at this 3905 level. Right here, the 3835 line is kind of a major one. We're sitting right here at this 3859. We're going to open up in this area. So still well above the transition point. This is constructive to the bulls. As I said, the 3900 line has taken the new positive gamma, so the right goalpost has come in. You can see that in magnitude, even though we've moved up in price yesterday, we're not actually seeing a huge increase, and we're not keeping the momentum to the upside, so we want to pay attention to that. To the downside, the left goalpost, minus GEX 3500, 36 is right there. You can see in the overall magnitudes, it's a race between the two. Right now, 3500 is one, which is a little surprising. As price moves up, you would expect these lines to get less because gamma is price sensitive in this chart. The fact that 3600 lost it and 3500 won, if you go look at the change in open interest, you'll actually see that the 3500 line is actually growing in put additions, and that's significant because people are taking advantage of that downside convexity. So that's it for today. If you have any questions, comments, want to come in, kick the tires, join us at GammaEdge.us, click the pricing tab, fill out the blanks. You'll get 14-day free trial in the Discord, a lot of tools, process flow, etc. turned on, and would welcome you to come in, ask your questions, and learn how to apply this to your world. Follow us on Twitter at GammaEdges with an S, and then here on YouTube. If you like today's content, let me know. Smash that like button, and of course subscribe so you get notified next time myself, Taylor, Michael post any content here. So that's it for today. Hope to see you in the Discord. Make it a great hump day, and practice safe trading. We'll talk to you later. Bye.